Good afternoon, everyone. I'm Dan Hussey with Zaner Ag Hedge, bringing you a Strategy of the Day update here for July 15th, 2021. We're going to take a look at soybeans and corn, what some of the price action, not much to speak about here today, nor was there much news, other than ethanol production being a little bit higher than anticipated there. Corn used for ethanol consumed there being a little bit higher than anticipated. There wasn't much news to sink our teeth into. We've seen some weather markets start to take hold. We've certainly the 6 to 10 and the 7 to 14 day forecasts are showing for are calling for hotter and drier conditions. Nothing that gets us too hot though. Only into the low 90s and maybe the mid 90s for some places in the Western Corn Belt and out into the Dakotas. So with all that being said, remember, trading futures involves risk and is not suitable for all investors. And everything I talk about here today is just my own opinion and not a direct trade recommendation. So, speaking of weather, we've got a nice cold front moving through the U.S. and some good rains hitting throughout pretty much everywhere. It looks like over the last 24 hours, everywhere throughout Iowa into the lower Minnesota through northern Illinois has gotten rain. We anticipate, right, as this front moves through, it's going to bring rain into and through the Ohio River Valley. But after this front moves through is where these drier forecasts now start to take hold. So we're going to be looking for over the next week for the 6 to 10 day, which showing you here, to continue. We'll get a new, this one came out yesterday here. So we'll be getting a new one coming out here shortly. And of course, the 7 to 14 day forecast or 8 to 14 day forecast here showing drier conditions throughout the Midwest. The U.S. dollar, we haven't talked about the dollar in some time here. The dollar has been flagging in a range, but ultimately has been strengthening since its May lows here back earlier this year. I anticipate the range the dollar has been in to potentially start fading off now, but given that we've been really unable to break above the 93 figure here, that is a big, I think, kicker here in the side for the grain markets and certainly for export markets, and maybe more so for wheat than anything in the near term. However, wheat's obviously been a market that's been driving and taking the row crops higher with that spring wheat conditions and the harvest underway starting to show signs of a missed production. So let's get into our corn and beans. Start off with December corn here. We know we've been, the threat of sounding like a broken record. We've been in a range here really between $6 now, tightened between $6 and let's call it $5.20. We only spent one day there below $5.20 to make that 507 low here in June or for the July candle. We've snapped back into this range, and when we really get down to it, if you take the entire range from $6.38 down to $5, it's kind of good to know that 570 is right in the middle of that range. So if we're talking about a market that is just technically reverting to its mean, coming right back up to 570 makes perfect sense. We also have that gap left open here at 587 or 578, excuse me, with the 580 figure right there that the market seems to be like a magnet up towards. Now, the 4-hour chart hasn't changed much since we spoke about it. There's some trend lines here holding against the lows that we'll talk about in the 15-minute here in a moment, but we're really just in a big old range heading back towards the center of that range as we speak. So trend lines against the lows here are continuing to make higher highs and higher lows day over day. Today was an inside day. The blue and purple lines on this chart represent the highs and lows for the day. The dark blue and red line is the high and the low for the month. So on a 15-minute chart here, I can see the highs and lows of each intraday, of each daily candle, as well as for that monthly candle, which is helping us see that the trend of higher highs and the higher lows that was 3 days running there has ended today. We had sideways price action inside and certainly above the 50% retracement from the prior day's range. So flagging above the 50% of a daily range here inside is not bearish per se. We need to see a breakdown back down to the lows of yesterday and a break below that low to really consider maybe this market reversing, which you can't deny could be happening from a 50% from the 611 highs to the 507 lows. Technical 50% level, it'd be leaving this gap open. And in a really bearish market, we could see that continuation lower without filling that gap. And we'd be watching for the 550 to 540 area to break to the downside to maybe begin confirming that type of idea. And of course, then a run back down to the $5 threshold. But with all that being said, looking for support here to keep the market, I think, really above the highs there from Tuesday and certainly above the consolidation in early trade on Wednesday, which was around the 545 area. So long as we remain above there and certainly above today's highs, corn should, I think, be the path of least resistance for December corn will be higher towards 570 to 580 to close that gap. Whether or not it's going to break out of that larger 4-hour time frame above $6, and that remains to be seen and is a question that I think weather markets are going to have to answer for us. So that kind of wraps December corn. Let's move on to November beans here. Also finding themselves in a bit of a short-term uptrend of higher highs and higher lows. Today, we did continue that trend, but we also broke that trend yesterday by making a lower low. However, closing above yesterday's highs and the prior day's highs certainly reversed that idea. But today, making higher highs and higher lows and really coming up to close and fill that gap is a good sign for November soybeans so far on this 4-hour chart. Now, we can't rule out that a larger dip down, if we see a slide and a sell-off, certainly before 1400 here, could take us still down to 1200 to 1150, or $12 to 1150. Not saying it goes there. There's lots of support we'd have to break before then, but I've seen price action like this before, and unless it gets real good legs and starts to break resistance and continues, more or less continues to turn slowly parabolic, we can often find ourselves falling apart. So now that we've closed that gap, certainly I want to see us get back to the prior day's close around 1396 to really confirm a gap fill for me. But the gap would be considered closed for all intents and purposes on this chart now. There is the question of a potential open gap, though, down around 1360 that we left at the open yesterday, something that I was talking about. But then again, in a bull market, we could leave that kind of gap open. 1439 is a gap above us that, you could consider a small gap here around the 1430 area. Certainly a break above $14 above this trendline resistance and staying in this channel higher could be the case. Now, I would not be surprised to see soybeans kind of fail to break above $14 and pull back for another test of trendline support around $13.40, $13. And of course, if it slid all the way down to $12, that might be a larger three-wave decline and a larger, pullback. In the near term, however, on the 15-minute chart, we still have an upward trend line heading higher off of the lows that it held very well today, and what seems to be some channel resistance coming in, which would now come in around $14. Higher highs and higher lows, with the exception of yesterday's new minor low that was a bit of a head fake before turning higher and closing above the prior day's high. Today's inside price action is a bit of a bull pennant. I expect another leg higher towards $14. And again, if we start to pull back, bigger support could be down around the 1360 to 1350 area. Prior highs from this breakout consolidation. And of course, if we start to slide, there's other trend lines and other places we can see the market hold below us. So that kind of wraps our short-term charts here today. We'll see where the market takes us into the end of the day. Watch for the shifts in the 8 to 14 day and 6 to 10 day forecast. We're definitely in weather markets, and until that August WASDE report, where we'll get a benchmark for yields, it's all moving targets. So, with that being said, could always be reached over here at Zaner at 312-277-0110. Give me a call. Love to talk with people about the markets and hear about your conditions and what things are changing for you. You can find us on Twitter and Facebook, and of course, you can always shoot me an email with any questions or comments you might have. With all that being said, have a great day, everybody. Leave your likes and your comments in the sections below. And also, do click on the link to check out our Zaner Daily newsletter, which is a free newsletter to get our entire team's daily market consensus. Have a great day, everybody, and we'll be back with you as price action develops. Take care, everyone.